Hello guys, welcome back to a brand new video on the Brazil FX trading. So the concept that I'm about to share with you guys made me almost 10,000 US dollars in one single trade, guys, and I'm going to be showing you how was I able to make this trade and what concept did I use. So guys, if you're new around here, make sure to subscribe to the channel, turn on your notification bell so that you never miss out whenever we post a video. Let's get started. So the concept that I'm going to share with you guys, it's called fair value gap. And when you look at my chart, this is my 4-hour time frame. I'm on there. So guys, let me stick it up here so that you can see it. Fair value gap. So traders, fair value gap is insufficient price action. So it's always that gap in the market that has not yet been filled. And most of you have already seen it here in my market. But I'm going to show you how do we trade on such a type of market. So now, I'll first give you an example of fair value gap. How does fair value gap look like? So, let me show you. So, what you see right here, traders, this is fair value gap right here. As you can see, this is a gap in the market that has not yet been filled. That is fair value gap. So, market has to come back and fill that gap. So, the reason why this concept is a good concept, because you're looking for buys and sells. We are looking for buys in a way that price is always going to come back and fill up that gap. The moment, so we need to look for buys before market starts shooting up. So that when it goes back and fills the gap, it's hitting our take profits. And then when price is done filling the gap, we are looking for our sells, because most of the times we're going to see price dropping, and this is the way. So as you can see, this current market. So the trade that I took today, guys, this is where the current market is. So when I zoom this to this side, you can see. So I took in my trade from this zone out here. I took this zone out here, because remember, guys, we had price. What I wanted, I took this trade before even having a confirmation. I took this trade down here. Let me draw out a line for you so that you can see it. Most of the cases, guys, you just have to risk. That's all I can tell you. Most of the cases, you just have to risk. So this is where I took my trade at this trade line, as you can see, guys, because this was, as you can see, since price fell to break here, meaning this was also a resistance level. But again, since price didn't come really and break this zone here, let me zoom in so that you can see. So since price didn't really break, go beyond, down here, so it just ended up here and then it started pushing up with momentum, as you can see. So I knew that price is going to go up, and even my major reason was, well, because I have fair value gap that has to be filled. So I knew at any time price had to come back and break this zone. So me, I took my chances, guys. I took this trade and put my stop loss just below here. So this is how I took my trade, guys. So I risked, but again, it was worth it, guys. This is all risk. So I'm putting my take profit just here where my fair value gap ends, and then I put my stop loss just there. So I was risking a few pips, but again, all I wanted is my price to shoot up. As you can see, when price started shooting up with momentum, and even price is still shooting up in momentum, but I've already closed up some of my partial profits. Closed off some of my partial profits, so that you can secure some profits. So if price reverses back on you, you don't go out in a loss. So this is just one example of fair value gap. But now let me show you fair value gap that has already been filled. So guys, when I zoom back here, you're going to see. So let's start from this angle right here. So when you see this massive drop, guys, look at this massive drop. We have 1, 2, 3 candles. So remember, we have aggressive selling in the market, guys. We call this, we have to mark out the candle before the 3 candles, traders. Or always do this. And the reason why we do this is because it helps us mark this previous candle as our supply zone. So that if price ever comes back to that zone, we're going to go in for our sales. Now look, when I zoom into this side, guys, this is so interesting, guys. I really like this concept. So when I drag my price up to this side, you can see. Now look what we have, traders. With the fair value gap we have this gap here. You can see this gap here. We actually had fair value gap up to here that was filled. So guys, let me start with this fair value gap. Actually, let me start with this fair value gap here. I don't want to confuse you. So the first fair value gap, this is what we had that was not yet been filled. As you can see right here, let me mark it out for you so that you can see it. So we have this gap that was not yet been filled, and you can even see price filled it, but again, this one won't really matter to me. So let's go for the major one. So for the major fair value gap is this one right here. is this gap between here. You see, so the gap between here and down here. This is the gap that had not yet been filled. So if you consider just one fair value gap, this one, it won't really price filled it. As you can see, price came back up here and filled it, but with one candle. So for me, I wanted like really a major move, and that major move was based off my supply zone. As you can see, when I mark out my supply zone, look what happens when price comes back there. Price comes back up here, and then it drops. The moment, guys, when you see rejection like pulling down like this and this candle closes, we are going to be going in for ourselves. But again, the best thing is to always take your trades on smaller time frames. So I'm going to be zooming into the smaller time frame and I'll show you how would you take that trade. But the first thing, how would we go in for our buys? Because remember, I told you whenever we want to take a trade, we need to do what remember I told you when you have fair value gap, we have to go in for both buys and sells. So the first thing, my buys would be down at this zone right here. So this is where I would be going in for my buys, as you can see right here. So one of the best confirmation that I like is whenever I have a bearish pin bar. Whenever I have a bearish pin bar or a bullish pin bar. So now at this moment we have what we call a bullish pin bar. You can see this candle right here. So let me mark it out for you so that you can see it, guys. So this is what we call a bullish pin bar. So guys, what I've marked out right now is what we call bearish pin bar. That is our bearish pin bar. So for those that don't know about the bearish pin bar, this is one of the best reversal pattern or candle that we like to always consider when we're trading the forex market. So the moment for me as whenever I see this type of candle, I'm definitely going to take my trade. So when I take my trade, where do I put my stop loss and where do I put my take profit? So the first thing, guys, this pin bar, as you can see, it appears at a level where price is already finding support. Look at this. Price finds support here. Price finds support again here, and then price finds support again here. Then something here. So meaning this candle came because of news. So meaning much momentum was pushing to the downside, but for some reason buyers gained momentum, and then this candle closed as a bearish pin bar. So meaning this other candle started pushing up with momentum. So guys, whenever you see this, I rarely see such type of a candle forming in the market and then you see price going down. I rarely see that. Mostly at a zone like this. This is a major zone, and the reason for this is because this is support again here. It's definitely going to be support, and you can even see the candle closed in up here. So when I take this trade, I take it definitely on this next candle. I don't even ask questions. I already have my confirmations that price has to fill a certain gap in the market. So I put my stop loss just below here, below there. As you can see, traders, below here, and then putting my target up here, as you can see. So depending on how I'm risking, depending on how much I am risking, as you can see, traders. So sometimes I can even bring my stop loss even below as low as here if I'm not risking like really that much. So guys, look at where my take profit is exactly at this same line. This is a line in between the fair value gap that was not yet the gap that had not yet been filled. You understand, guys? This is the gap that has not yet been filled. So this would be like my strong buy. So when I buy, guys, look, I'm buying so much. Like price goes up aggressively, and then boom, the moment it touches my fair value gap, the moment price touches the fair value gap, look at what happened. It starts pulling back down. It starts pulling back down because that gap had to be filled, guys. Most of the cases, whenever we have fair value gap in the market, we shall always see market fill up that gap. And I'm also going to show you how would someone benefit off this sell. So let's go to the smaller time frame. So the time frame that I like to play around with is I like to play around with the smaller time frame, like 5 minutes time frame, or sometimes the 15 minutes time frame. So let me first mark it out so that I won't have trouble. Yeah, let me first mark it out like this. Okay, perfect. So this is my 15 minutes time frame. I like to consider the 15 minutes time frame more. Now let's go back and zoom out. So let's see. Let's look at that zone there. Where would someone go in for their nice trades? Where would someone go in for their nice trades? Let's zoom out and see. As you can see, traders, so probably I don't like to trade. I don't like to enter a trade when it's just dropping or something like that, because you never know what will happen in the market. But again, taking your trade off the other candle would be a best thing, because you can see when price pulls back and closes down like this, so whoever took that trade just below here on this next candle, you wouldn't be taken out in any type of loss. You can see putting your stop loss above there and putting your take profit just below, below like this. Let me show you. Let's zoom out. Putting your this, so put it around here where this candle tries to push in. So I like to guys, whenever I'm taking trades, I don't like to use buy stops or sell stops. I really monitor my trade. So as you can see, putting my take profit at this zone here, yes, down here, even though price didn't really come and hit my take profit, I'm someone who always closes off partial profit, so that when price reverses on me, I'm not losing out on anything. As you can see, traders, price pushes down back in here with much aggression. But again, this would be a nice sell trade. As you can see, most of the guys, when you're like really confident about fair value gap, you can definitely take the trade the moment price touches in here. So meaning, if you have to take your trade would be around here. Let's do this, pull this up, put our entry right there. So probably, guys, so for those that are confident about this market, what you do, you set what we call a sell stop at exactly this level right here, or you set what we call a, not a sell stop actually, we set, but even a sell stop can work, but we set a sell limit, so when price taps in there, it starts just dropping, guys. You just have to make sure you have to set your stop loss, traders. You have to set your stop loss. These are all risk-free trades, because most of the time, guys, I will say this, most of the cases I've seen fair value gap in the market, price has always went back there and filled that gap. I've already seen price filling up that gap. So let's go back to our 4-hour candle time frame, and I show you the other fair value gaps that we have in the market. So we go back here. Every time, guys, I see fair value gap in the market, it's always being filled. This is even nothing. This was like a major move, traders. So if you're still watching this, make sure to like and subscribe. If you're enjoying it, make sure to like and subscribe, traders. So this was like a major move, you see, down to down here. You can actually, even my take profit would be at this zone here, even down here. But again, I'm someone who always closes off partial profits always in the market. So again, look at this, traders. Since this is a 4-hour time frame, fair value gap is always, it appears everywhere. So this is another fair value gap right here. This, as you can see right there. So for those that are scalping, for those that like scalping in the market, this would be a nice scalp up. You see, price pushes into the zone after here, then it pulls back. So meaning this would be a nice buy scalping. If you're scalping, this would be a nice buy, and this is some crazy number of pips, because remember, guys, this is US 30. This is US 30. This is US 30, traders. This is US 30. So for those that like scalping in the market, this would be a nice buy off. So here would be buying off, because remember, we have fair value gap. And traders, there is a strong reason why I'm recommending this type of concept, because it's very easy. All you have to be is very, very patient, traders, with this market. You have to have a high level of patience. So that is another fair value gap. Most of the people will say imbalance and all that, but me, I'll call this my fair value gap. Guys, another fair value gap is right here. Look here. This is another fair value gap in the market, traders. This is another. So this is, if you're only trading one currency pair, you will be able to see all these, traders. Look, even when we had price pushing, so meaning I had bought, you see, I had bought in price shooting up in there, then price starts coming back down. Guys, look through your markets. Do I have another fair value gap? Look through your markets. Do I have another fair value gap? Another fair value gap is just down here. Traders, price comes back, fills the gap exactly where I've marked it out. Price starts shooting back up. The moment price fills the fair value gap, it starts shooting up back. Traders, and you often see fair value gap on such type of markets. We often see fair value gap on these types of markets like US 30, Nasdaq, and all that. But again, fair value gap is a nice concept if you're trading in the forex market, traders. Even though I wasn't choosing really fair value gap here, I would have taken trades off here because you can see this. I would say this is a triple bottom. You see, 1, 2, 3. I would say this is a triple bottom. But again, fair value gap is one of the strong confirmations I would consider in the market, traders. It's a very strong confirmation. So look, traders, fair value gap 1 here, fair value gap 2 here. Now this one, it came with this fair value gap came with our supply zone, then fair value gap, another one right here, another one right here. So probably there's a lot, even very more and more fair value gaps in here, guys, that have to be filled. But the concept here, wait for price to come to your fair value gap, take the trade when price touches the fair value gap after the fair value gap has been filled, or look out for a zone before price goes back to fill the fair value gap. So if it's a sell or a buy, as you can see, traders. So meaning whoever took their trade here at the sell trade after price filled the fair value gap, you would have taken a nice sell. As you can see, you would still stay in the market until price came back and filled this gap right here. But whoever took their buy trades from here, they would have been in profits, traders. My advice, trade only one currency pair and you'll be able to grab all this in the market. You can all do this analysis that I'm doing right now, but when you reach a time of looking for your entries, traders, always look out for entries on the smaller time frames. However much you have fair value gap, but you should always have confirmation. And the reason why I'm making this video right now, because most of the markets right now they're in ranging markets. Whenever we have ranging markets, we are going to see more of these aggressive buying and aggressive selling. So, but before you go to sleep, as you can see, when I made the first clips and I was telling you about the fair value gap, price had only filled half of this when you check the previous video, but now you can see almost I made the first clips at around 8 p.m. So right now it's almost clocking 1, it's already 1 a.m. here in Uganda. So price, as you can see, it has almost filled. So meaning when the markets open again, price is just going to shoot up and fill up that gap. Then we may see probably rejection or price coming up to even up here. Then we see a bounce off. But traders, this was a very good setup. I don't even know what to tell you guys. If you still think forex is very hard, you're going to think forex is very hard until I don't know. But forex is very easy as long as you have proper psychology, you have discipline, you're only trading a few currency pairs, you will master forex, guys. So this is what I want to tell you before I go off. So you can see, let me even mark it out for you. You can see, so this was the gap right here. You can see when price has come back here, has filled almost 75% or if not 80% of the market. So traders, see you in my next